Hello guys, so today I'm going to actually show you guys on how I actually look at the markets, and this is actually going to be on a couple of pairs I just had today, which is I think let's look at Euro US dollar. I don't normally look at all these pairs like this. I just bring them out for the sake of let me say just going through to see if I can get any setup for next week probably. But my main pairs I trade is actually on my top three weekly and monthly, which is right here, which is Euro US dollar, Pound US dollar, then gold, okay, which is gold versus US dollar. So one of the trades I took this week is actually this particular pair. I'm still holding this. I have hit my first TP, which is right here, and I've also I think two of them I capitalized on one, which is around this area. It came down and went back up, hit my TP, and I also capitalized on others, which was here, and I'm still holding two positions on a smaller account actually, and this account is actually demo, and yes, I think I'm really doing good. So I'll show you guys screenshots and you see. So okay, so here's a screenshot guys, which is around here. So let's look at actually the pairs I am actually looking at this camel week, okay, which is pound Aussie. Okay, so on pound Aussie, what I actually can see, let me clear my charts and we start from the weekly time frame. I don't normally do this because sometimes I get confused on the higher time frame. So what I just normally do, so you see that on the higher time frame, you see I am actually in an uptrend. Okay, I'm clearly in an uptrend because you can see price has created this low, broken, created another low right here, then broke this high, and you can see price just creating a series of higher highs and higher low. And so I'll look at my high by how I trade. I'll look at my high to be just on this weekly close, which is today's Friday, 10:13 right now as I am here in my country, London time, and my low will actually be this one. Okay, let me make my low to be the most recent, which is actually this right there. Okay, so now let's go to the daily time frame and let's look at what I can see. So I have shown you my weekly high and weekly low. Yes, others will look at this place to be their weekly low, then their weekly high will probably be this one because this can possibly retrace, then push back up because of this particular order block right there. Okay, and price can also come and then just mitigate on this particular doji, which is also another block before going, because you can see we have imbalance lying down here, so imbalance lying down around this area. So per how I trade, that is how I will actually look at it. Okay, so on a keynote, so this is actually my weekly low and then my weekly high, which is this one. And let's go to so I am on daily time frame, and then you can see that on daily time frame nothing has really changed, just still having the same low. So that's why I said some people consider this as their weekly low and then their weekly high, and take this one as their daily low, then their daily high probably been broken, so they take this as their daily high because today is a close of the day, then their daily low, which is this particular one. If I would outline this one right there will be their daily swing. Okay, so let's go to the 4 hour. So on the 4 hour time frame, what I can actually see is that this is also same thing. So this is this would be my 4 hour low, then 4 hour high right there. So, and also I can take this one as my 4 hour low, then 4 hour high, but I prefer to take this particular one as okay. I think taking this will be very valid because it has a very clear breakout structure, which I will look at it because you can see price pulled up from here, one impulse, created a low, then a high, breaking this particular high which was being formed, and then couldn't break the previous low. So now you can see we are in a range formation. So right now we are kind of forming a range and a kind of reversal. So I will look at us to tap into this particular order block on the 4 hour here before we reverse back to the downside. Okay, and so let me just clear my charts. I don't like seeing lines on my chart most of the times. So on the 4 hour, let's zoom in back to the 2 hour time frame where I actually look for my order blocks and my entries. So right now on the 2 hour time frame, you can see the low that was being created was actually this particular one, and now we have that low being broken on the 2 hour time frame where I actually look for my order blocks. And you can see we have a swift low and a high right here which is being broken. Now price has broken that particular low, also came and broke the main low that I'll actually look at for my potential reversal. And at this point I'll be looking at this particular order block to get tested, this order block right there, and then I'll take my entry all the way to the downside. But it seems price has actually tested my order block. So let's zoom into the 30-minute time frame. So on the 30-minute time frame, what I actually see is that there is no clear imbalance on this particular area right here. So the possibility of price returning to that area is very low. So you can see from here we can't see any clear imbalance inside of this. If you cannot see, let me just zoom in, or you can zoom in on your charts as well to see if you can see any imbalance. So you can see price has filled everything right here. So you can see we have imbalance filled, and there's no actually any imbalance that is left. The only imbalance that is left right now is actually this small one, which price has also filled all the way. And as price was going, the low that actually broke the swing that actually broke this low is actually this particular swing right here. Okay, this particular consolidation, or this particular order block, right? This particular order block that broke the low. So I am taking my order block to be the bearish candle, which is this one, because it would be this one, the last up move candle before the down move. But you can see as price has actually came, it was not able to engulf this particular one. So I'll move my order block to this particular one right here, right? And then you can see this is now my order block. So price just missed the entry with just, I think, 1 pip. Okay, 2 pips, with 2 pips. Okay, so as price has missed our entry and has also made a consolidation right here, so you can see there was a range which formed inside of this, like an Asian range, which is not, but just some kind of little pause, but consolidation, then made a turtle soup, which is a big breakout, then came back into the market. So right now I'm looking to take my entries from this particular range. Maybe I wait for price to come back into this and then come back down. And in this case, so I'll say price has actually met my entry criteria. But on which order block will I be entering? So this is an order block also, and so as it's an order block, you can see there is a wick which I will not like to actually leave this wick out. So when I'm putting this, I'll actually make sure that price has actually tapped into this. Then my stop loss is actually, I can even leave it here to 34 pips, even 35 pips. Okay, that's the safest way. That's the safest way I think it can be kept, because price can just come in, then stop you out on this particular, if your stop loss is here, then go down, tap into this order block, and then start making higher lows and lower highs all the way to the downside. Okay, so this is the safest place to put your stop loss, or you can just put it barely here. Okay, but to be on the safer side, just putting it here, there's no problem with it. 35 pips cannot miss anything. After all, I don't look at the pips, I look at the risk to reward ratio, what price is giving me. Then if I'm satisfied with it, then I take it. So now let's shift back to the 2 hour time frame. So on the 2 hour time frame, what I look on Aussie dollar is actually price returning to tap into an entry. So as I said, this is a break of structure, so let's just mark it out. Let's mark it out and identify this as a break of structure. that BMS, I am not using the B or break of structure like some people type it BOS. There is nothing wrong with that. If you type BOS, there's nothing wrong. Just that like I feel comfortable with the BMS, which is a break of market structure. Okay, there's nothing wrong with this. They are all the same. They mean the same, nothing else. So that's just whatever. And so now let's wait for price to come back into this and then tap into. So some people too will also leave their entry around 50 pips. Yeah, 50 pips. I think 50 pips. So 50 pips, just right above this, and then their target to be around. So their first target should be this order block right here, which is 1 to 2. Then the second will be this, and then overall will now be. So you can see I will be targeting the lows because you can see we have nice double bottom, which a lot of sell stops and buy stop losses are actually right here. Those who bought this particular trend has their stop losses lying on this particular area, and those who are ready to wait for this to come and break has their sell stops, which is lying down here waiting for price to come and break, and then they'll be in profit or whatever. So I would like price to come and then stop all the buy stops around this area, buy stop losses around this area, trigger them in, then maybe make a move up, stopping out the sellers, then we continue to the downside if possible. Okay, I'm not saying that's what the market is going to do. The market can do that, but the market doesn't just respect my orders. Okay, so that is what I have on pound Aussie, that's pound Australian dollar. So that is what I actually have for this week. So now let's go to Euro USD, and then I'll break my trade down. So on Euro USD, I actually had a very nice setup, which was last week. I took a lot of let me say losses, which was shown on the screenshot. I'll show it again right here for you guys. Sorry, just looking at something else. So on this particular entry, you might not see an entry right there, but I wouldn't have been able to get this entry, but I was just there, and then something just told me to move back to the lower time frames. Let's clear the whole charts. So after moving back to the lower time frames, what I could see was that price broke structure on the lower time frames. So price made a low right here, then made a high, then came down and then made a lower low. Okay, then after that lower low, it went breaking this particular high and then creating a new high. So now after price did this, I now said, okay, fine, let me put my stop loss. Let me take this particular candle, because you can see on this particular area it is actually a consolidation. Okay, there is no clear order block right there for me to use. So I just considered this long bearish engulfing candle as my order block. Okay, so just this one. Sorry. Oh yeah, we just this particular one right there. And then I had my entry just here, my buy limit. Okay, I was already having a buy stop which was lying down around this area. I was waiting for price to now come, tap in, and then we start pulling to the outside. Whilst I was having the buy stop because I was looking at this pattern which was supposed to form. You can see from here we have a straight pattern just forming right there like this, and I will wait for price to actually break, just using the trend line as a guide. If price comes to break the trend line and reach this area, I would like to take buys all the way from here. So you can see price came, and then after price tapped back inside, it took this entry first before moving back up, right, then tapping into my next entry, came back and retraced and went all the way up. And now I've already hit my first and second my 2 TPs one, my first buy stop entry. I didn't take any market execution on the first 2 entries I took, but the rest was now market executions. So when you go to the 30-minute time frame, you see that price formed a very nice order block, which was just something like this. So you can see it very clearly. And my stop loss was just around this area, and my first TP was just here, which was I took it from the 1 hour order block. So this particular order block was my first TP, because I said price will come there and reverse or mitigate. I don't know which of them. I'm not a market maker. And you can see price has already started reacting off of it. Okay, so this is where my TP has. So I have banked 1 to 5.6, so approximately 6. So let's just say 5.6 risk to reward ratio on one trade just in 1 week. I think I took the trade on, I think Wednesday, right? Wednesday night. Or was it yesterday? Yeah, it was yesterday morning, around 12, 1 to 2 a.m. And then at dawn, right? So, and this trade has actually given me good. That's actually given me good risk to reward ratio. I was there with this pullback and all this movement. So let me see how many days that's taken to be able to judge when I took the entry. I can't actually remember. So just 1 day. So it was Thursday that I took the trade. I took it on Thursday because I watched all these movements. I watched everything. Even when price came there, I thought price would just move up straight forward. But I saw that price came and mitigated up on this one and started, when I started to just go straight forward. I did it. Okay, so I took my entry and I closed my eyes. I said this trade here I must hit TP, because I've never been hitting TP. I've just been taking partials and maybe it comes to stop me out and those things. Though I do get good sum of risk to reward ratio, but I have never taken TP since I started trading. Okay. Yes, I've taken, I can't remember, but I've taken, but most of the times, because I don't always put TPs. That's what I do. I don't always put TPs. Even the rest of the trade left, I just locked in profit around this area. Let me just mark up for you to see. My profit locked in is here, and there's no TP. Okay. Only one has TP, which I will look to exit the entry around this top here. So which would be around 1 to, let's see, 1 to 12 risk to reward ratio. But apart from that, so that is my trade I've taken this week. And the trade I've also missed is pound dollar. Pound dollar, it was very scary. I didn't take it actually. I think I even posted saying I've taken it on my Telegram group, but I didn't take it. One of the scariest trade. Somebody just let me to analyze this. I just analyzed and left it like that, but I didn't take it. I just kept this and tapped and boom, started moving to the upside, but I never took this trade. And gold as well, I didn't take gold, but I have another entry on gold. So what I have on gold is just actually this one. I don't know if price will favor us by going back to maybe do something, give us a write off before moving back to the downside, or to just continue going to the downside next week. But I can see we have a clear break of structure, a low being made, and then price has now moved back with a correction. We look forward to see the next fall of gold. Okay, the next strength of gold. So that is what I'm actually looking at on gold this week. So guys, this is what I have on gold, and this is what I have on pound AUD, then my trade breakdown on Euro USD.